Good afternoon and welcome to our latest webinar. I hope you're all back in the swing of things post the summer holidays, and I hope you all had a lovely time off, whatever you got up to, and are now ready for another audit season coming up between now and Christmas. I'm joined today by one of my colleagues, Lauren. Lauren is a senior manager and has a considerable amount of experience within the academy sector. So, as an introduction, we're going to cover today the Financial Handbook 2009, the Academies Financial Handbook 2009, and also the Accounts Direction 2018 to 2019. So if we get straight into it with the Financial Handbook, the Financial Handbook is essentially a set of rules and responsibilities that each Academy Trust must adhere to. It sets out the financial framework, financial policies, management and guidance. It was recently published back before your summer holidays in June 2019, and it's important to note that this is effective from the 1st of September 2019. Looking at the size of the document, it tends to increase year on year. It's now up to 66 pages, which is 10 pages longer than last year. It's a useful document and it's useful for different reasons to different stakeholders, useful to members, trustees, accounting officers and so on, and therefore I would recommend you do read it. The handbook starts with some comments from Lord Agnew on behalf of the Secretary of State, and essentially he reiterates the importance of financial management, of internal scrutiny, which we'll come on to later, the importance of good reporting and management accounting and how important that is to allow trustees and directors to make informed decisions. And also it includes details of publications and resources that all stakeholders can use, and we've got a slide on that later too. So before we get into the detail, I thought I would just overview the parts to the handbook. You'll see that there's some additional parts to the main body of the handbook this year, and they are underlined: internal scrutiny and the regulator and intervention. There are also appendices, although they've now been called parts going forward, such as the musts that we'll come on to later. So, internal scrutiny, as I say, this is now a separate section within the financial handbook. It's always been there to some degree, and academies have always had to assess their internal controls. They've always had to disclose within the governance statement their considerations and the output from any internal reviews they have carried out, both strengths and weaknesses. But this year the financial handbook has sought to clarify exactly what academies should be doing. So firstly, with the audit committee, it now states that you must have one. But if your academy trust is under 50 million in terms of incoming resources, the audit committee can feature or be part of one of your other committees. Most likely it will be included within the equivalent of your finance committee. The audit committee has responsibilities for agreeing the schedule of works, the plan of work, and monitoring the progress and the findings. The financial handbook expressly says that the audit committee should meet 3 times a year, and the approach should be risk-based. So the audit committee should be considering where internal controls could fail, where the risks are, and should also consult their risk register when considering the direction of their internal scrutiny work. More on the risk register later. It's important to note that the scheme of work should be driven by the audit committee rather than the auditors or the individual carrying out the internal scrutiny work. So, as I say, I think it should be audit committee driven rather than the auditor driving the type of work carried out. Having said that, the checks can be carried out by the external auditor, but it is very clear within the financial handbook that if the external auditor is to carry out some work on behalf of the audit committee, it should be under a separate audit engagement or a separate engagement letter to the audit. You can also use an internal auditor. They should be qualified per the financial handbook. That could be an in-house individual or could be something you procure in. Trustee or peer review is still allowed under the new financial handbook, and I know that's something that many academy trusts prefer to do, but there are some additional points around ensuring they have relevant qualifications and experience. So there are some options available here, and you can go down the route of a mixture. It's not a one-size-fits-all, or you have to pick one of the options. So in terms of reporting, this was a new requirement under the financial handbook, that when you submit your next set of annual accounts, your 31st of August 19 accounts in December 19, you'll also be required to report your latest internal scrutiny report. Now, given that this is a transitional period and the ESFA have only recently notified Academy Trusts of this requirement, I think the ESFA will take a slightly relaxed view this year. They will want to see something, but the format will be left up to the trusts. Going forward to December 2020, when the trusts will be submitting their accounts to August 20 and their management letter to that period, we expect that there'll also be an additional form or template that will need to be completed, which will be the trust justifying their internal scrutiny position, any findings and any actions that are required. More will be released on this in the coming weeks and months. So the other new section within the financial handbook is the regulator and intervention. Again, many of these points were existing or implied in previous handbooks, but now have been pulled together in one section. It makes it clear that the ESFA does have oversight and can exercise its powers when required. These powers include the right to access, reviewing the FMGS or funding audits, and also becoming involved if they feel there is need or there is a chance of financial notice to improve. Reporting fraud and irregularity, it's worth noting that the ESFA should be communicated or spoken to if any fraud or irregularity over £5,000 occurs within the trust. The ESFA then has the right to carry out its own investigations if it deems necessary. So moving on to some of the new requirements under the regulator and intervention section, there's been a tidying up of the financial notice to improve section and what exactly are the ESFA's powers in this area. It starts off by stating that if a financial notice to improve is instructing on a school, it must appear on the trust website within 14 days. Once a financial notice to improve has been put in place, it's more than likely that the ESFA will then be involved in decision making in the school, and some delegations that usually trusts benefit from will be taken away. For example, the ESFA will have say over any compensation payments and any pooling of gag decisions. There are a number of other revoked delegations listed out in the financial handbook. It's also worth noting there that the ESFA can pass on or refer trustees and directors directly to the insolvency service. So this will be where they feel that the director's behaviours have fell short of what is required of their responsibilities within law to be a director. So moving on to some other changes within the financial handbook. From a governance point of view, there is now an expectation to appoint a clerk. I know many trusts that we see already have a clerk, but it now does actually feature within the financial handbook. And it makes it clear that the clerk should not be a trustee, be the principal or the chief executive of the trust. Executive pay, this is an area that the ESFA and the Secretary of State and so on has focused on now for probably over a year. The financial handbook expressly states that executive pay should be evidence-based and should be documented. That should include any benchmarking that has been carried out and any considerations when deciding executive pay. It's worth noting, although it would be obvious to many, that no individual should be involved in deciding their own remuneration. Moving on to financial reporting or management accounts, the Financial Handbook has beefed up the requirements here too. It makes it clear that they should be prepared monthly, that being management accounts should be prepared monthly. They should be shared with the chair of the trustees every month, irrespective of the size of the trust. Again, it makes it clear what should feature in the management accounts, and these have been listed out. So the income and expenditure, any variation to the report, to the agreed budget, a cash flow statement, a balance sheet, and also some KPIs, key performance indicators. We'd always recommend in this area to keep it to a short number of KPIs, perhaps 4, 5 or 6, to give you the opportunity to monitor and actually carry out informed decisions based on those KPIs. In terms of other financial requirements, as I mentioned earlier, the risk register is now mandatory. It's for all trusts to prepare one and to monitor it. It is an important document. It's an important document not only to highlight the risks, but also to then start considering what the mitigating factors and steps are to bring those risks down to an acceptable level. It's important to note that many of those risks will not be mitigated or completely eliminated, but it's bringing it down to a level that the trustees feel is acceptable or appropriate. So it is an important area, and it's something you should certainly be looking at, and not only preparing, but then also reviewing on an annual basis at the very least to ensure that it's an evolving document. It's important to note that trusts' audited accounts should be provided to members, and there's also new requirements to ensure that senior employees are on the payroll. I think this is looking at any of the off-payroll working requirements and ensuring that there's not any situation where the trust may be at risk from using contractors and so on. Moving on to related party transactions, this is something that was highlighted last year and signposted, but now is part of the Financial Handbook. So as a reminder, from April 19, you should be reporting all related party transactions and seeking approval if the related party transaction exceeds 20k. So as a summary, we've been through quite a lot there, but I would say it's more clarifications rather than substantial wholesale changes. Just a reminder that the Financial Handbook is not solely for your finance team. It's an important document for all stakeholders of the trust. We just talked about the Financial Handbook that's effective from the 1st of 2019, so 1st September 2019, so not necessarily the version that your audit will be carried out on. Review of the musts. Towards the back of the document there is a list of musts, the requirements that you certainly should be following. I'd recommend that you review those. And overall, please do let us know if you have any queries on the Financial Handbook. So before I pass over to Lauren, I thought it would be useful to run a poll. So please do let us know your opinion on the following. Do you think the ESFA's new policy around internal scrutiny is a good idea? So it's obviously a new requirement. To some degree, it just beefs up what people have or trusts have been doing in the past. Albeit now further information will be communicated to the ESFA, so they will get sight of some of the documents that perhaps in the past they wouldn't have. So I'll just give it perhaps another 10-15 seconds to see what the general response is from everyone that is on the webinar. I can see that it's a fairly mixed review. Good, well I think we will close the poll there. As interestingly, 57% have come back yes. The rest have come back maybe, and 0% for no. No one believes it's a bad idea. So I think it's an area where the ESFA have actually scored well, and that is very useful to hear. So I will hand over to Lauren now to talk through the accounts direction and some of the changes that have occurred this year.
Okay, thank you. So I'm going to go through the accounts direction for 2018-2019. So this is for the period ended 31st of August 2019. So this will be the one that the audit in the following months will be based on. So this document covers the details required for preparing the Academies Financial Statements. It's a mixture of the following documents you can see there. So it's the Companies Act, FRS 102, which is the accounting standards, as well as some Charities Act, the charity sort, but also includes some specific ESFA and funding agreement requirements. So there are some additional bits needed in these accounts. But as with previous years, there are fewer changes again, which is good news. So firstly, it's not necessarily a change, but just a reminder, all Academy trusts with a funding agreement that was signed during or prior to the start of this year, which was the 1st of September 2018, are required to prepare and submit accounts to the ESFA by the 31st of December 2019. So if we just look at some of the changes to the financial statements, then the first one is in the trustees report. So last year there were a number of extra sections that were required in the trustees report, one of which was around fundraising. They have recommended this year that where trusts don't undertake any formal fundraising, that they include some wording stating this. So on page 93, there's an example of the wording that may need to be included if this does affect you. So moving on to notes to the accounts then. So agency arrangements and events after the reporting period may not be relevant notes to everybody, but if you do have a requirement to include these, they must now include the prior year comparative information, even if it is nil, whereas last year you only had to provide current year information, so a little bit more required there. Coming on to the accounting policies for assets, fixed assets, so where they comprise of two or more components, for example, a building would have a roof, boilers, possibly lifts, each component must be depreciated separately over its useful economic life. So there may be some work to be done around splitting those out this year. Next, we've got the fixed assets. So they've revised the categories needed in this note to align it with other reports, particularly the annual return, which we'll do probably towards the end of the year and need submitting early next year. So it should hopefully simplify this process. Last year, there was a new requirement for a 2-year combined fund note, which didn't add any extra information. It was just combining the current and the prior year table. This requirement has been removed this year, so there will only be 2 fund notes instead of 3. And the new requirement for the related party transactions, which Darren mentioned, we do need to include a statement in the related party transaction note to confirm the Academy Trust compliance with this. Other changes then, so not necessarily presentational points in the financial statements, but just as important, it clarifies that the accounts must be sent to every member of the trust. Last year, we had a lot of discussion around alcohol. The wording in the 17-18 accounts direction wasn't particularly clear. They have revised the wording this year, and it is clear that the ESFA's position is that the purchase of any alcohol, even from unrestricted funds, is deemed to be a regular expenditure. Next point now, relating to governance. So they have expanded the areas for auditors to consider when support their regularity conclusion. So this is a big focus area for the SFA at the moment. There are around 15 or so items in the list. It's on page 152 if you wanted to have a look. They include things such as checking that the board have met at least 3 times a year, the accounts are being circulated, the management accounts are being circulated in line with the financial handbook, and also considering if the factors determining the executive pay are clear and recorded. So this may result in some additional questions from your auditors this year so that we can ensure we've covered all of those points. The final point there, so trusts with a trading subsidiary company will need to be aware of a change in the recognition of the income recognition donations from their trading subsidiary. So income can only be accrued into the trust where there's a legal obligation for the subsidiary to make the donation or payment, for example, where a deed of covenant is in place. If this is something that might affect you, then please let us know and we can look into this a bit further. So just in summary then, so as I say, governance is a key focus area. There may be a little bit more questioning and audit work to do around this year, although it is something that has been looked at in the past. We've just got a more specific list now. The depreciation accounting policy, we may need to consider splitting out some assets. The related party disclosures, we need to be making sure that that statement's in there confirming that the trust has complied, and no alcohol, the ESFA confirmed, so there shouldn't be any purchases through the Academy Trust going forward. So before we move on then, if we just do another poll. So does anyone feel that the changes that we've highlighted there in relation to the accounts direction will have a significant impact on their Academy Trust? Just wait for everyone to come in. We don't see that there will be significant impact, but if anyone does feel that they may be affected, then if you get in touch with us, we can talk you through any changes that you're concerned about. So if we close that poll now, yeah, so 79% people have said no, 21% maybe. So for any of you that aren't too sure, as I say, please do just get in touch with us.
Great, thank you, Lauren. So just to wash up now, we've listed here the publications. As I mentioned, the Financial Handbook, right at the beginning, the Secretary of State has made it clear that Academy Trust should be reviewing these documentation or these publications to ensure that they are fully compliant. And here's a list of some of the publications. Deadlines, as a reminder, unfortunately we're having to start to think about Christmas and another year passing by, etc., etc. But just a reminder of some of the deadlines coming up. So that brings the main part of our webinar to a close. We have had a couple of questions come in. Unfortunately, we're not going to be able to deal with all the questions, and we will come back to you separately on any that we do not cover off here today. Just touching on one of the items that come on, are you expecting significant changes to the accounts direction in the coming years? Well, it's hard to know, but I would say based on the last couple of years, there's been fewer and fewer changes. And some of the changes this year are actually clarifications of perhaps areas where the ESFA didn't quite foresee the impact that it would have. So in short, I would imagine by a couple of years' time we'll be at a steady state. There is a new SORP on the horizon. When that is released, I'm sure there'll be some changes as a result of that. But until the new SORP is released or a new version of the FRS 102 is released, I can't see too many changes afoot. The second question has come in. Please can you clarify the fixed asset component changes? In particular, should academies restate their figures? Lauren, would you mind picking up on that one?
Yeah, so we'll need to apply judgment, and we'll need to look at each individual fixed asset register and for each Academy Trust. But we feel it's unlikely to be material in any one year, the difference in depreciation. So if it is something that as I say, that you're concerned about, if you just get in touch with us, we can look into that and see what work we need to do to put anything in place.
Great, thank you. So to finish up, thank you all for your time within your lunch breaks, presumably. Enjoy the rest of your day. If you do have any follow-up questions, please do feel free to use the contact details that are on the page that hopefully you're looking at, or contact your usual James Cooper Creston advisor. Good luck in the coming term, and I'm sure the audits will run smoothly. Thank you very much. Bye.